All right, we are live on YouTube now. Welcome everyone to Investor Performance Group in July. I appreciate you guys coming out during the summertime here because you guys could be out camping, doing some other fun stuff. But instead, you're here hanging out with me, learning all about what's going to happen on the market. And of course, we have an exciting night still for you guys because we're going to be talking about how to get involved in multifamily investing. Is that you or me? Someone's talking. There we go. I'll just mute that and see if that works. There we go. Okay, so we're going to kick things off. We're going to get started right away here. First and foremost, all of you guys already know this, but for those online, we are brought to you by the Kelly Fry team. We are a full-service real estate investment team here to help you guys build your portfolio, build your wealth in real estate. And we've got a pretty quick agenda tonight. We kept it kind of short since it is the summertime. We're going to be starting with the market update today. So we're going to dive right into the numbers. And it's been a little shocking the last couple of months here. So we're going to talk a little bit more in detail what's actually happening right now in the market. Then by then, we'll hopefully have Svitlana joining us from TD Bank, because obviously yesterday was what? What happened yesterday? Rate drop, right? So we're going to have someone from TD Bank come out and talk about the rate drop, what her predictions are, and what it means for you as investors. Again, we got another exciting Tales from the Trenches with Mr. Jim Garnett. And I've been told that you have to pay attention to this one because it's a little tricky. So make sure you guys watch that. And of course, we're going to have our keynote speaker, Kelly Fry, talking about how she has built her multifamily empire with that very first domino out in Chilliwack. And then we're going to finish it off with our hot deal of the month. So again, we do encourage everyone to take photos, videos, post it on social media, Instagram, Facebook. Make sure you tag us at Kelly Fry Team. We love to see what you guys are learning, what takeaways you guys are having from the night. And let's dive right into it. Here is your market update for July 2024. And again, the numbers are probably going to shock you because we saw one direction as we headed up through the springtime, and things have taken a turn, even though we had already seen the rate drop already start to happen. So let's dive into it. This is straight from the Real Estate Board of Fraser Valley. Housing market sales fall despite Bank of Canada rate. You've got Kermit going, oh, what's going on? Let's take a look at this here. So this is what the trend has been showing for inventory. We like to start with the inventory because this is the supply side. And again, all the prices, when we really boil it down, it all comes down to the economic fundamental principle of supply and demand. And as we can see here, we've been on a significant upward trend when it comes to supply, especially in the Greater Vancouver area and Fraser Valley. But even when you look at Chilliwack, from 1066 last June to 1294, it's still a big jump in that area. And obviously, as we continue to see inventory increase, well, the next thing we got to take a look at is the demand, what's been happening. And this is where it was a little bit of a shocking tale because everyone was anticipating in June when we had that rate cut, what did everyone think would happen? Buyers would start maybe taking a little bit more action, right? I mean, we had a busy spring. We had a lot of buyers coming out of the woodworks, but again, this has been a much sharper incline than we had seen with sales. And well, sales kind of went the opposite direction for us here. You can see here throughout the springtime, it was increasing, keeping pace with the increase in inventory. And then suddenly we hit around April and it's been trailing off. Sales have been decreasing. We've continued to get more sales. If you remember, there was over 13,600 listings in Greater Vancouver, but only 2,396 sales. So when we have a downward trend on sales and an increased trend on inventory, what is the relationship that we're going to see on the prices? Pressure is going to come down, right? And now that we've had a couple of months going, we're going to start to see that trend already start to show up in the stats. Now, Vancouver's actually not done too bad, but again, it's a pretty broad area. But Fraser Valley and Chilliwack have started to see the decline, and it's a pretty sharp decline in that 1 month. We had a little bit of an upward trend through the spring, leveled off a bit. Now we're starting to see a sharp decline in Chilliwack. We're going to really want to pay attention to this. We just had another rate cut yesterday. Will that be enough to spur buyers on and increase the sales, which will then level off things when it comes to the price drops, or if we continue to see the downward trend on sales, will that mean we continue to see downward pressure on the homes? This is what we're going to have to keep an eye on as investors. Now, when we do see these trend lines coming down, what does that mean for investors? Prices coming down, what does that mean? Good buying opportunities, right? So there are potential buying opportunities in the market as well. So don't be afraid of that. If you are thinking about liquidating something, that might be something to think about. But maybe there's some opportunities where buyers or sellers are now going to start reducing their prices, where you're going to get properties at prices that we saw maybe around the beginning of the pandemic, maybe not that low, but close to it, maybe 2021. All right, let's take a look. We're going to go out and start in the excuse me, Chilliwack market. Chilliwack, we can see here already that pressure. Over last summer, we've had a decrease of about 16.3% year over year here. Days on market is dropping, excuse me, but inventory has been pretty flat. Townhouses and condos have stayed pretty level. That's keeping things afloat in that area. You've got days on market up 100%, but still takes only about a month, 39 days for condos. But inventory is increasing significantly on both of those. If we continue to see that, we'll see these numbers continue to maybe stay flat there. Abbotsford, we're down about 10.2%, down 1.2 on townhouses. Condos are still up a little bit. Again, inventory continuing to be the play here, where we're seeing a lot more inventory hitting the market. 15.9% on the detached side of things, significant jump on condos at 66.3% over last summer. And last summer, we had already started to see that inventory start to climb. Mission market, down not too bad, only 5.2% over last summer. It's still over $1 million in Mission right now. But again, inventory is up 16.7%. Townhouses up a little bit, and condos actually down 11.1%. However, this market, 33% condos, or 33 total listings condo, down 43.1. It's still a very small market, right? The fact that that's enough is pretty incredible to see the development that's been happening in this area. They're continuing to put more and more attached into this area, and we're going to continue to see those numbers fluctuate quite a bit over the next little while. All right, Langley. So the Langley market down only 3.7% over last year. It is a more expensive market as well. Detached around 1.639. Townhouses down very slightly, still almost 878,000 for the price there. Condos have been, staying relatively stable. In fact, when we're looking at different market segments, this is an interesting thing that we've noticed, Kelly and I. The Langley market in the sub 500, 550 mark is still moving in that range right now. We're still seeing a lot of activity. Anything over 550, especially over 600, seems to be a little bit slower. So we get to experience all these different market segments, and we'll talk a little bit about that in a bit. But you can see inventory significantly on the rise in all of the market segments here. Maple Ridge, down 1.9%, not too bad. Townhouses, 1.4%. Condos still up 5.4%. Again, a significant increase in inventory. Now, Maple Ridge, like Langley, for a while there, has had a significant push for development. We've seen a lot of new developers come in. And when that happens, after about a year and a half or so, what happens? Everyone throws their properties on the market to try to get rid of them, especially when we've seen interest rates go up. And so we've seen a flood of inventory in terms of the assignment market, similar to that as Langley. And what then ends up happening is one of the buildings is going to close here that we know of recently. That's going to take a whole bunch of listings off the market, and then others will come back on. And so there's a big fluctuation that when it comes to condos, some of that's resale, some of that is assignment market. Excuse me. So we got that cough from being on that plane. I was talking some of that travel stuff I was dealing with. So I had a cough that I got from it. So, all right. Surrey market down 8.9%, townhouses 4.7%, and condos also slightly down here. We've got an increase significantly across the board in most categories on the total inventory, total listings. Again, the more upward pressure we get, the more we're going to see these prices come down over the coming months, if we don't see a significant jump in demand. And then we finish it off with the Vancouver market. Just try to compare, all right? Take Fraser Valley, look at Vancouver. Vancouver's been pretty stable, pretty flat. Nothing going on too crazy. Still up slightly on the detached. Vancouver East averaging over almost $2.1 million right now. Townhouses over almost 1.15, and condos down slightly, just under 750,000. But again, we are seeing inventory increase in this market, and that will start to impact things as buyers have more choice. Sellers are going to have to be a lot more aggressive with their pricing to make sure that they attract the most amount of buyers possible. The biggest mistake we're seeing a lot of sellers make in the market is that they're looking at what their neighbor sold for 6 months ago, 9 months ago, a year ago, and they're expecting that price. And it's one of the things, a conversation that I have with a lot of sellers right now. And if you're in this boat where you're looking to sell, I recommend you think about this, is a perceived loss versus an actualized gain. And what do I mean by that? Well, everyone's looking at, oh, I'm going to lose $100,000 if I don't get 1.5 million because my neighbor got 1.6 a year ago. But I bought my house at $800,000. So they're losing an actualized gain of, what was that? What did I say? 800,000 to 1.5. That's what? $700,000 to try to gain that extra $100,000 that the market would have bared a year ago. So it's a perceived loss versus an actualized gain. So as investors, we have to look at what our gain has been versus what the market was a year and a half ago. So that's something to keep in mind. Good timing, because we've got our next speaker here. Just came right into the nick of time.
Believe it. I went to the Oval Office.
Oh, geez.
That's why I was perfectly on time, but it was just so natural to drive there.
Yeah, when you get into the flow.
Here, you move, so I apologize.
No worries.
That I made you ready.
Well, we got our next speaker here right on time. So that's the market update, folks. Our next speaker, obviously, we're going to talk about another form of a market update, what's going on with rates. We got Svitlana here from TD Mortgages. She's got 11 years of experience in the financial industry, committed to helping people realize and uncover their potential with real estate financing. So I'm going to give you that there. So thank you very much. You can feel free to clip it on. And you don't have any slides, so we're good to go there.
Yes, thank you so much for inviting me, and nice to see new faces here too, and old faces as well. So I'm Svitlana. I am a TD mortgage specialist, so I only work with TD, so I do mortgages at TD, so A lending mostly for me. So I'm here to talk a little bit about the rates and what TD Economics thinks about what is happening and what will happen. So I think it's a great timing to talk about this today, because so much exciting stuff is coming for investors. So we heard the news. It's 25 basis points down, or 0.25% of the prime rate, or overnight rate, as they call it. Which actually, what interests me is, when they announce the rate, they say, oh, the rate was at 5% and now it's at 4.75. So that makes people assume that, oh, how come my rate is 6%? Or how come my rate is 5.5? If they're saying it on the news, it's supposed to be 4.75. So, and a lot of people who are on a fixed rate think that if the Bank of Canada say it's 0.25 less, then why their rate is not the rate there. Well, not necessarily whoever is in the mortgage right now in the rate, but somebody who is buying and got quoted a rate, they think that, oh, my rate's supposed to be 25.25% less. So what they announce on the news is actually the overnight rate, which is the rate that the banks lend money to each other for a short period of time. So this is more like a zero ground. And the prime rate and the variable rate, substantially, it depends on that rate, because the banks build their cost of borrowing there. They add a little margin for risk associated with borrowing, with lending money to somebody else. And that's how the variable mortgage rates and the line of credit rates built. Fixed rates depend on bonds, and the bonds are like market. If you invest in market, like somehow like through stocks, maybe you can see that the markets move a lot on predictions. So if somebody says something, oh, EV market is not big enough, for example, or Chinese EVs are flooding our market and there is no room for our EV companies to grow, that brings the stocks for EV, for electrical vehicles down. So the same happens with bonds. So if the Bank of Canada says, oh, well, today we're decreasing by 0.25, but we think that we might decrease by another 0.5%, which might not happen, but they're saying we might do that. So the bond rates actually will price it in, and they will actually go down, and the fixed rates will go down then. The variable rates will go down based on what the Bank of Canada says on the spot, and the bonds depend on, for example, yesterday they said, oh, maybe we won't increase. And the bonds rate, you will notice the bond rates will go up again. So it means the fixed rate that you're getting at the bank will be higher than somebody, a friend told you was 2 weeks ago, because it fluctuates all the time, just like variable rates, but not directly. So what happened was last month, the inflation went up a little bit. So that scared economists, like, who are predicting this decrease, and they thought that there will be no decrease this time. So, but then the unemployment data came in, and there was a raise in unemployment that made them think that no, it is happening. So the change in rates will depend on two things: is inflation and where it's going, what happened in, well, US not so much, but in Canada, where it's going, they deliver inflation updates every month, and unemployment rates. So the perfect scenario for the rates to go down is inflation going down and unemployment rate going up. It means that economy is slowing down, so it's a perfect situation for, it means almost 100% that they will decrease the rates. If inflation is up, but the unemployment is down, so meaning that more people are working, more people are making money. If they're making money, they can spend them. And if they spending them, it means that more demand for goods, and it means that inflation might go up. So it's like 50-50 scenario here. And then obviously if inflation is up and unemployment is down, most likely they will hold. So our inflation was up a little bit, but because the unemployment was up and last month inflation was down, so it was all good, so they decreased the rates. The economists of TD, they actually say there's going to be 2 more decreases this year, which is another 0.5%. And the predictions for the prices, actually, for the prices, not a huge increase like this year. For BC, I think it's, well, really Page says 5%, but TD says, I think was it home prices, actually, yeah, about 2%, 1.5% to 2%, and 2025, 3.5%. But what's interesting is they're predicting that in 2025, there will be 1 to 1.5% decrease in 2025 for the whole year. So that should increase the sales by 20% in British Columbia based on the predictions, and which will increase the demand and which will increase the prices. So 2025 will be the peak, like end of 2025 will be the peak for prices and the bottom for the rate. So if you're buying a PR, primary residence, then probably would be a good time to lock then for maybe 3 to 5 years. Yeah.
You say 20% sales increase?
Sales increase, yeah. Sales. So right now the sales are down probably one third, right, or one fourth. Yeah. So, but there will be the sales for the year of 2024. There will for the year it will be negative for sales, but 2025 will be 20% increase in sales. And the prices will go up between probably, well, we can't know for BC. They're predicting 3.5%, but I think it will be more, maybe 5 to 10% till for the 2025 alone. So for the variable rates, they're saying that potentially, so right now where it's 4.75, potentially we can go as low as 3%, which is another 175, which is, I think, a bit too aggressive. But that's what they're predicting based on modeling right now. I wanted also, any questions about rates? Yes?
Can you, sorry, I just did.
Mhm.
Can you explain why TD has their
Prime rate?
mortgage prime?
Yes.
Now, quite a few years ago, I noticed that because I have a mortgage with TD and quite a few other banks, and they didn't really even tell me what they're doing, but because variable rates are based on that,
Yep.
it's a bit of a ripoff. Now, how can TD get away with having a higher prime than the other major banks?
So they have this prime for only mortgages. So if you notice, they will for HELOCs or secured lines of credits,
Yeah.
they have the same prime as everybody else.
Okay.
It's actually something to do with something in the system or something like electronically how their systems work. But if you look at going and comparing variable rate mortgage at RBC and variable rate mortgage at TD, what will happen is the rate you will arrive to will be similar and competitive to what the other banks offer. What we do is we use the higher discount from the prime rate. So if, for example, if the prime is 6.7 right now, as of Wednesday, as of yesterday, actually, it's the next day, 6.75. So, for example, if you're getting at RBC prime minus prime minus 1 to arrive at 575, at TD, because they're 0.15 more, it will be prime minus TD prime minus 1.15. So if you notice, if you ask for, so some people like to ask for variable rate as like, what's the discount of prime that you're offering? So our discount of prime is a bit more because our prime is higher. But when you arrive at the end rate, it's actually the same end rate or similar or competitive end rate as other banks. I know it's a little bit confusing, and yeah, but it's
That's why you need an expert.
yeah.
Well, thanks for clarifying that. That was quite helpful.
Yeah, thank you. So it's not more.
Sorry, Kelly.
So I have 2 renewals coming up with
Yeah.
TD.
Yeah.
Like probably August 1st. And I've stalled them out because I wanted to see what happened with rates. Now, it seems to me in the past, I think TD has a skip a payment option, which I have used at times just for out of cash flow. Will they allow that right at the time of renewal, or do I have to wait till it renews before I can ask for my skip a payment?
Oh, you can ask for it anytime. Yeah. But the thing is, if your mortgage is variable,
No.
okay, good. You're lucky. I mean, you look. No, I know. TD is very competitive on rates. So what I would say is go get a rate somewhere else first, and then come to the branch and say, this is what I have. And if you want, I can tell you what rates I've seen with discounts rather than what they tell you at the branch. There is a special phone number you call and negotiate. So yeah, for sure.
Question for you. So a bit of context first. So I haven't made a lot of smart moves in real estate, but one of the smart moves I did do was starting to recognize what interest rates were going to do. And so I started locking down by fixing interest rates in 2019 and 2020.
Mm-hmm.
And I have rates between, I think my lowest is 1.5 to 3.15.
Mm-hmm.
Come next year, those chickens are going to come home to roost,
Mm-hmm.
and they're going to be in the 5 and 6 range, give or take, potentially 4 to 5.
I would say if it's fixed more.
Is there any concern by the banks that there's going to be a swath of mortgages that are going to essentially double overnight in payment almost?
No, because a lot of those like fixed mortgages like you have, We have ability to refinance you back into 30 years, right? So a lot of people who are maturing into higher payments, if their payments are much higher and they feel like they're not gonna able to pay them, what we do?
New qualification?
It depends. If you're not taking more money, that actually we can work with like special team who would refinance you and move your mortgage back to 30-year amortizations.
And I'm just sitting there and I'm looking, and most people here are probably investors.
Mhm.
Most people probably have been looking at, you don't have a hope in heck of raising your rents in BC to even come close to offsetting
Mhm.
the $600 to $1,000 a month more
Mhm.
you're gonna have. So I think there's some risk, but that's just my own personal. TD has, I could be wrong, it's been a while since my TD mortgage. Don't they have a fixed payment option on that variable?
Yep.
So is there gonna be an entire waft of variable rate mortgages that are gonna come due that people are not even gonna get whammied with a higher interest rate? They're actually gonna have to catch up on amortization again too.
Probably. We have not seen a lot of those yet.
Yet.
Yes, but we also don't know, like most of those are 5-year terms, right? And so they bought in 2022. So they bought in 2022 means that they will probably mature in 2027. So by that time, the rates will be a bit better. Yes. So I think they will just deal with that as the problems comes. A lot of my clients who actually, when we realize that the prices are going up, they fixed the mortgages. Some clients are fixed the mortgages and up the payment. So there is a lot of them, but I want to say that more of them are in Scotiabank. So I'm actually very interested to see, because Scotiabank had a special program for brokers at the time of COVID, so I don't know why, but they placed like a lot of mortgages at Scotiabank. So that's why they had a very bad rates for a little bit of, like, for a big portion of last year, because they didn't have enough cash because they lent it too much. So, but we'll see. I guess we'll see.
So it sounds like it's taken as it comes.
Exactly, and it's totally exactly.
Well,
that's exactly
thank
it.
you for being telling us that you're willing to work with the client.
Yeah, of course.
I view a big giant wave coming. A tidal wave of that. Some people are going to be very shocked, and I'm shocked when I've been working on these renewals for almost 2 years
Mhm.
to try to get kind of ahead of it. And when it finally came down to it, the number on the paper was, it shocked me how much higher the payment was.
Mhm.
Like,
Or have you seen? I've seen like mortgage statements where they have amortization. Like I've seen one 46 years. Like it was, that was shocking.
To that point, I have a mortgage variable with TD.
Yeah.
It's prime minus 0.9, I think. It was at 1.71 just a while before
Mhm.
COVID. In the last year, my mortgage has been not getting paid down, but going up.
Mhm.
So I have infinite mortgage amortization now. So I'll never pay it off, and I'm in my 60s.
Yeah.
No, it's from a cash flow point of view, I don't really care if it goes up. I mean, effectively, I'm just borrowing more money for it's an investment.
Exactly.
That's also not doing very well because it's in Dawson Creek, the worst market in Canada. Anyways, just interesting to have a mortgage that is growing, not getting paid off.
Yeah. What I actually want to mention is that variable rate is relatively new. Actually, variable rate was only introduced in 1987. And this inflation that we've had, we have not had for more than since 1987. So this situation is actually as new to you, like it's the same new to the banks. So they will deal with all this like as it comes. So if somebody comes to renewal and says, no, I can't pay that payment, there are ways to extend amortization beyond 30 years. There are ways to help you to keep the house. So the banks are not interested to sell and to go like in court to sell your house, because it's a lot of work for the bank, because a lot of people are involved to actually get this done properly in a properly legal way. It's salaries, it's time, so it's expense to the bank. So they would rather spend a bit more time and hopefully work something out with the person than go that route. So I think it's new to all banks. This has not happened for a long time, since probably since
the previous Trudeau.
exactly. So it's new to the banks. They're learning, and I'm sure there will be some ways to have this all sorted out.
Yeah, in my case, I've gotten a couple of letters saying you should increase your payments so you get back to paying the thing off. But at the same time, I think they're not pushing it.
No.
So I'm just taking the attitude. So it's not like growing by much. It's like a few $1,000 over the last year. And I think as long as I'm making my payments routinely, they're just happy to leave well enough alone, anticipating that rates will drop. And with this latest drop, I might just be break even, meaning
You will pay interest.
my payment is almost all interest.
It was one
now
of your
it's-
biggest profit centers on why you own a piece of investment real estate is mortgage pay down. It's now the opposite.
Yeah, I mean, that's another story.
Yeah, so-
I'm crying with the both the market I'm in and the high interest rates. But
So the question I ask when I have a conversation with people that invest in rent-controlled marketplaces, if you ain't getting appreciation and you ain't getting mortgage pay down, how much of an appetite do you have to be a landlord in BC?
Fortunately.
I want to. I don't know how many of you have variable mortgages, but what I want to note that, so to your situation, sorry, I didn't get your name. Reiner. So for example, so what happens if you don't pay off? So for example, you had a payment of $2,000 on a variable mortgage at the beginning of everything, right? And then slowly the interest rate started to go up, and now your $2,000 does not cover interest anymore. So that interest for example, the interest on your mortgage is $2,300, $2,300, right? So every month, $300 is not paid. So what happens is there is a registration, right? When you got the mortgage, you probably paid 20% or 25%. So that's your equity, and you got your initial mortgage amount. So that initial mortgage amount started to go down as you paid the mortgage, right? So you probably got, for example, the mortgage of $200,000, you paid it down to $180,000. So you have $20,000 with buffer. So that $300 that you don't pay in your interest eats that $20,000 slowly, right? But then when there is no more $20,000, that's when the payments will start going up, and they will go by that $300 when that happens. So basically, if you're wondering like what happens to my payment like in the meantime, so they will go up forcefully, but only after all of that what you've paid is eaten out by that extra interest.
yes, and when I started at 1.71%, more than half of my payment was interest or principal reduction.
Yeah, so you have that buffer.
So I built up, I paid it down for a while.
Yeah.
And then it's going back up. But as an investment property, that doesn't really matter terribly much. Cash flow is more important than paying the thing off. But the question you raised, if the value is not going up and
you're eating out what you've
reduction,
already, yeah.
like how long do I want to subsidize and feed this property before I sell it? But I'm optimistic that values will rise and interest rates will drop, but maybe I'll talk to you in 2 years and
For sure.
see how that works.
For sure. And before I finish, I do wanted to note something for people who invest in pre-sales. We will have a 35-year mortgages for certain projects that you might be interested in, because when the time comes for getting a mortgage, when it's regular way, like 4 months prior to completion, you can only get that 30-year amortization mortgage. For builder mortgages, which are more than 4 months, and it will be on projects where TD is on site. I know in Maple Ridge there was Inspire was one of those, so you'll have to see who is there. So you can get a mortgage up to 4 years prior to completion and book that 35-year mortgage now, because after 4 months mark, you will only be able to get the regular 4. And then you don't have to get that rate. You get an approval at 35 years at higher rate probably than it will be in 3 years, but you will take the market rate. So your program stays, but you only get the market rate at the time of completion. So if you book the rate at 5 and the market rate is 4 at the time of completion, you're getting your market rate. But in 6 months, we'll be able to give 35-year mortgages. I think when you're an investor, I think it's good to spread them out, and it will be only offered for builders, because somehow they found a loophole in OSFI regulations where they can do that for pre-sales only. So that's what's coming in the next 6 months.
Awesome.
So good.
Okay.
By pre-sales.
Yeah, I love it.
Yeah, thank you.
Thank you. All right. Well, again, thank you, Svitlana, for coming. Oh, I'm on yet. Coming out. I mean, obviously, it's big news anytime the rate changes, especially in the last 4 years. We've been watching it drop like a fly, rise up, and now we're seeing it come back down on the other side here. All right, we're going to kick things off and move on to our next segment here, which is Tales from the Trenches. This is a segment that we do every single month that just kind of shows you the other side of the coin. When you're a landlord or when you're dealing with rental properties, what could possibly happen? So 2 things. Oh, thank you. 2 things. 1, how you can either avoid from someone else's mistake, or 2, if it's unavoidable, how do you deal with it so it mitigates any loss for you? And of course, we got our regular speaker on the subject who deals with a lot of tenant situations, and there's always good lessons to be learned. Mr. Jim Garnett coming up. And today it's not a perfect science. And take note of the animals that are on this, because that's going to come up later. So, like how we incorporated that for you? Oh, you don't. Yeah, you don't actually have any slides. You got your notes. So I will give you this instead.
Thank you. Thank you for having me.
Let's see if that turns on. There you go.
There you go.
Stick it right there. You bet.
Beautiful. First off, the disclaimer for anybody that doesn't know me or anything else. Just be very clear about the fact that I'm not a property manager. I want to get that out there right now. That's not what I do. And I say that now every time I'm talking to people, because it's important, apparently. So I'm going to tell you a story tonight, and I'm going to refer to my notes a lot, because I'm probably going to be as confused about it as you are. So it's important that we're all the same amount confused as this goes along. When you start into dealing with a problem tenant, it's really important that you don't lose focus of what the end game is. And the end game is, if you got a problem tenant and you want them out, then that's what you got to work at. You got to work at it till you get them out. Okay. So there's a lot of moving parts in this story here. So in 2012, the landlord signed a rental agreement with a couple and the mother-in-law. And the mother-in-law was going to live in the basement. The couple were going to live upstairs. In very, very large letters on the front page of the tenancy agreement, it says, "No pets allowed." And you can't miss it, because the letters are 3 times the size of any other letters on the tenancy agreement. Everything went along swimmingly well until about 2022. And the landlord is served with a dispute notice for emergency repairs to be conducted on the rental home. The tenant's going to take them to RTB. That was in September 2022. Yeah. So October 2022, we came on board and we sent caution letters to the tenants, because they had a dog and a cat, and they weren't supposed to have pets at all. So because they created a situation that drew attention to themselves, all of a sudden people realize that they have pets over there. And this landlord has fairly significant holdings, so it's not paying any particular attention to any one building or house or whatever along the way. They're reacting mostly to the feedback they're getting. And like so many landlords, they're not doing regular inspections, so they don't really know what's going on over there. So they find out. So caution letters go out on the dog and cat. Same month, the tenant sends out another little missive and says the stove's not working. So throw that onto the heap of what's going on. In November, there's a hearing right away for the emergency repairs. RTB jumped on it right away and said we got to have a hearing and get this sorted out. So the arbitrator rules in favor of the tenants, and he orders the landlord to have contractors enter the home and determine the extent of the work that has to be done, and get on with it. And he also assesses a monetary penalty to the landlord, where if the landlord doesn't complete by a certain date, then they're going to have to pay the tenant so much a month moving forward. Really nice decision. So also in November 2022, the tenants get served with a 1-month notice to end tenancy for cause for the dog and the cat, because they still got them. And the dog, just so you know, the dog is about this tall and just a fierce looking thing. And I'll get into the description of that dog later. So the tenant, of course, disputes the notice, says the cat's not theirs, doesn't say anything about the dog, other than the fact that the dog is a service dog. Okay. So I said, okay, that's great. Well, service dogs have to be properly trained, licensed, and everything else. And so there's a whole process for that. So we asked to see the papers. And the response was, well, Surrey bylaw was here because there was a complaint about the dog barking. And apparently it was barking quite incessantly, because that's all service dogs do. I've seen them all the time. Surrey bylaw has all the papers. Why don't you ask them? Well, you know what? Thank you for the invitation. I will. So I called Surrey bylaw, and Surrey bylaw says, we don't have any papers. They didn't give us any papers, but we do have complaints about the dog barking. And just to be clear, service dogs don't generally bark a lot. They're by your side and they look after you, and that's what they're there for. So everything goes from that point into April of 2023, when RTB hears the matter relating to the dog. And the tenant maintains the dog as a service dog, but refuses to provide any proof of certification. The arbitrator decides in favor of the landlord. So an order of possession comes out. Tenants have 2 days to move at that time, so they get served with the order of possession. They don't move. And shocking, exactly. So off to Supreme Court we go, we get a writ of possession. And the bailiffs come to the door to exercise the writ, and they're met at the door by the tenant holding a cattle prod, saying, you're not coming into my house, and kind of throws some papers at them and says, there's a stay on this. So off to Supreme Court. So that was April 2023. And that was it for the bailiffs. In May of 2023, tenants paid their rent. And here comes the first lesson of the evening. They were served a notice, order of possession to get out in 2 days. That means the tenancy has essentially ended. So from that point onward, they need to be served a use and occupancy receipt every month for every month that they cough up money. Okay? If they don't, it reinstates the tenancy and the order of possession goes out the door. So that's what started happening in May of 2023. So then in October 2023, a judge in the Supreme Court, I won't even mention Justice Ball's name, there's no sense in even talking about that. But anyway, he's going to hear the case. And I had some experience with Justice Ball before, so I wasn't really optimistic about how things were going to turn out. And Justice Ball hears a case for a full day. And somewhere during the course of the hearing, the tenant says, well, my dog's a service dog, et cetera, et cetera, et cetera. And I told the arbitrator all this way back when, and that should have all come out. So the judge says, well, I don't have any information from me about that. In fact, I don't have any information about what the arbitrator may or may not have said. So in the absence of the transcripts from that hearing, I'll be making my decision based on what I've heard. So the tenant walked out of the courthouse, got online, ordered the transcripts from RTB. They arrived the next day, and the tenant hustled back to Supreme Court and said, I've got new evidence, and the court has to hear this. So they went to Justice Ball, and Justice Ball says, well, why don't we set a date for early December and we'll talk about it then. So he's gone from going to take the evidence to make a decision to we're going to talk about it in December. So that was good. This business of the dog being an emotional support animal or a service dog keeps coming up all through this whole thing. And at one point in Supreme Court, the tenant gives evidence to say, well, this dog protects me. I go into the wilderness and I look for gold. And I take the dog with me. And if anything ever happens to me, that dog will come back to town and get someone and bring them out here. This is what he tells the court. Okay. And he says that dog will fight off wolves, bears, whatever. He's just there to protect me. That's what his job is. Well, yeah. Agents for the landlord. So, but the bottom line is, by his own definition, he's not really talking about what service dogs are trained for. So that kind of goes from there. So that was back in December of 2023. Then where did we go from there? We got the invoices from the contractors. All the invoices came in for the work that the landlord had to get done. And those all came in, and the landlord had people in doing all this work and stuff, and all those invoices came in, and they get looked after. Okay. So then an arbitrator got involved with that and looked at the invoices that had come in, looked at the work that was supposed to be done, had the tenant tell them the story about the contractors coming in, and then decided arbitrarily that maybe the landlord hasn't done enough work yet. So what you're going to do is you're going to bring in more contractors who are going to look at the place again, and they're going to decide what work now has to be done. And you have to report this by no later than, not do the work, just report this by January the 31st, 2024. So you need to have all of that done by then. Well, it's already in December. It's getting close to Christmas. It's tough to find contractors to do anything that time of year. So it's into January, and now you're working on their scheduling to try to get them in there. And so things were a little tight getting towards the end of the month. And actually what happened was on the 31st of the month, the very last day of the month, the deadline, supposedly, all of these reports get sent off to the tenants. And that's going to come back a little bit later here. So January 2024, the mother-in-law's check bounces. So the tenant gets a 10-day notice, and that's in the works. Also in January 2024, tenants are served with a 1-month notice to end tenancy for cause because their rent was late in April, May, August, and October of 2023. And the act says basically if you're late 3 or more times in a 12-month period, that the landlord can serve you a notice to end tenancy for cause. So we thought, this is going to make short work of this. February 2024, already we're having a hearing. And we're going to have a hearing with regard to the 1 month notice for late rent payments. All of the evidence goes in. Everything seems to be going rather smoothly. And then the arbitrator comes out with their decision, and they make the following determination. I find the landlord issued the 1 month notice for repeatedly late rent in January 2024, 3 months after the most recent late rent payment in October of 2023. With reference to policy guideline 38, I find the landlord failed to act in a timely manner after the most recent late rent payment. 3 months is not a reasonable amount of time to wait to end a tenancy for this purpose. And the landlord's failure to act is a waiver of their right to rely on this provision. For the above reasons, I find the landlord has failed to prove that they have sufficient cause to issue the 1 month notice to the tenant and obtain an end to this tenancy. Therefore, the tenant's application to cancel the landlord's 1 month notice under Section 47 of the Act is granted. So that's the second lesson of the night. Apparently, you're supposed to jump on that as soon as that third one comes in. You're supposed to jump on that right then and issue the 1 month notice. Doesn't matter that it says 3 times in the calendar year somewhere in the Act. There's this little obscure guideline number 38 in there for, it's to help arbitrators bail, when they want to. So,
Know the rules, comrade.
absolutely. So that was it for February. And then end of February, rent's late for March. But we decided with the landlord, we said, look, we can issue a 10-day notice, which we'll do. But, we don't know what's going to come out of the hearing coming up, because there's another hearing coming up to talk about all of the work that was supposed to be done in the place. So an arbitrator, so the arbitrator heard that case in November. The landlord was supposed to bring in the contractors, and the decision at that time came up about the estimates and stuff of the work that had to be done by the contractors that was served on January the 31st. So what happened there is this went to another arbitration. The landlord was ordered to pay between $2,000 and $3,000 to the tenants. And the reason for that was those reports were supposed to have been delivered to the tenant by January 31st. They went to the landlord or to the tenant January 31st by email. Well, under the Act, they're not deemed served until 3 days later. So the landlord took a burn on that again.
Just a question: were all the work that had to be done normal wear and tear, or was it abuse? Abuse of the premise from the tenants?
Probably a mixture of both. It's just they've been in the place for since 2012. You're 10, 12 years into it. Landlord hasn't been in doing a lot of work during that time. And to be fair to the landlord, tenants don't, until there's a flood or until there's a fire, tenants are always reluctant to go to the landlord and say, this is broken, that's broken, this needs to be fixed or whatever, because maybe they'll put the rent up. Maybe it'll be a problem for them somehow, or maybe they just don't care because it's not their place. So they don't report these things, and it just it goes by the wayside until such time as something like this comes along. So March, no rent's paid. But you know what? The landlord owes the tenants a bunch of money. There's it's just over $1,900 that the tenant pays for rent. So NSF check in January, plus the rent for March. We'll wipe all that out. We'll make everything clean for the landlord. Bear in mind that every time that there's a dispute with RTB, there's $100 floating around, and one way or the other, that $100 either goes to the tenant or to the landlord. And so when you have things happening and you get multiple hearings happening, the $100 slides back and forth, and you have to kind of keep track of where it is. We get into April of 2024. There's another 10-day notice goes out. Tenant's got a shortfall of less than $200. So that ends up going forward and gets before an arbitrator, and the arbitrator looks at everything and says, you know, back in January, those reports didn't get out to the tenant on time. So I'm going to penalize you another $200 for not getting those reports out on time. So you actually owe the tenant $36 is what it came down to. So that was another slam for the landlord. And that went forward. So we get into May, now 2024. We're getting close to where we're at here. The judge, remember him back in December? Yeah, well, he tucked everything away in December, and he said, you know, I'll render my decision shortly. And after that second hearing, one in October, one in December, he decided that he'd sit on it. And he sat on it until about May the 27th or 28th. And then he came out with a decision. And the decision he came out with, he said, I'm ruling in favor of the landlord. I'm not sufficiently convinced that this dog that we're talking about is a service dog. And he says, for all of these reasons, and he lays out all of these reasons about the dog barking and fighting bears and doing all those sorts of things. And so he says, I'm going in favor of the landlord on this. Now, this has got to have been quite stressful on the tenants. And so I think really, you know, they really deserve some time in order to get ready for their move. So I'll give them till the end of June. So you got another full month. Okay, that's great. So at least the end is in sight. You know, we're looking at June 30th. And there was some discussion about that. And we thought, okay, well, we'll wait till June 30th. We'll see what happens. June 1st comes along, no rent. So 10-day notice. And we say, okay, here we go. This is good. So we've been counting up these 10-day notices, and we're kind of keeping an eye on them to see what's going on. June 28th rolls around, and we've become aware that there's going to be an emergency hearing at the BC Court of Appeal. So what's happened is our hero has gone to the BC Court of Appeal on the 28th of June, 2 days before they're supposed to move, with this emergency hearing, which they basically created the emergency, and then they got before a justice of the Court of Appeal who adjudicates cases to see whether or not they're going to send it before 3 judges to have it looked at. So just by chance, we found out about this hearing, and also by chance, we were able to log into the call and were able to give some evidence in that on behalf of the landlord. And we got through to a certain point in this, and the justice says, I don't think we're going to be able to finish this today. The next day I see on my calendar is July 17th. Are you okay to come back on July 17th? And I, from our perspective as being there as the landlord's agents, we said, absolutely. So you know what we'll do? There's a lawyer who has been seized with this to deal with this on the landlord's behalf in terms of dealing with the Supreme Court, who can now go to the Court of Appeal. But as it turned out, he was out of the province when the first hearing came up on June 28th. So that's why we ended up in the hot seat. We said, well, he'll be back by then. He'll be able to speak with us. So we thought, this is great. So July 1st, no rent. So we thought, perfect. Okay, we served another 10-day notice on the on the tenants. And we served them with another 1 month notice and said, okay, so July 2nd, we did that. And we took 3 months back and we said, we can do this. So that's what we did. And we served them with another 1 month notice. They were really happy about that. Delighted to get it. So we said, okay, they were late for rent April, June, and July. And we thought, we're going to take guideline 38 out of play here. And 2nd of July, they get the 1 month notice. So then the second hearing before the Court of Appeal came up. There's a lot of discussion about guide dogs, about service dogs, about emotional support animals, and all that sort of thing. And after all that we've been through and everything else, the tenant comes up with some certification documents for the dog. So we're looking at it, and we're thinking, okay. So we went online and looked to see where they came from. They actually came from the internet. And you can go on the internet. There's a site on there that you can go on. You can put your dog's name in there. You can put your name in there. You can actually print these documents, and they look really good. There's a nice looking certificate and everything that you can get that says that your dog's now a service dog. So we presented that evidence to the judge, and we were able to do that because they gave it to us a couple of days early, and we were able to do the research on that and find out what was going on. So this went before the justice, and the justice looked at this and he says, I think that this should be the end of this. I'm ruling with the landlord on this. This is where this is going. I don't think this is a case that should be heard by the Court of Appeal. I think we can just about close the door on this. The tenant says, well, Mr. Justice, is there any way that we can appeal your decision? Why, yes, as a matter of fact, there is. So you can go to the BC Court of Appeal and you can file to have my decision reviewed to see whether or not I have erred anywhere in the decision that I'm bringing forth today. So that's what we did. And so today's Thursday. On Tuesday this week, we get a call from the lawyer saying they now have a pro bono lawyer.
Oh my God.
Okay? And the pro bono lawyer is going to represent them in their appeal to the Court of Appeal to see if Mr. Justice made any errors in his decision along the way. So that's where we're at. We have reached the point where after all of this, now we still have a 10-day notice pending. We still have a 1 month notice pending. If all else fails, and if the Court of Appeal somehow says, the justice erred, the tenant has a right to stay in the house as long as they want. We've still got the backup plan of the 10-day notice that we're going, and they still haven't paid rent. So we're well beyond the time that they should have done that. And the 1 month notice is very much in play. So it's ready to go. So that's my tale for tonight. If there's any questions, I'm happy to answer them as best I can. I might have to refer to my notes, but that's where you're at with things. If you're doing these kind of things, those use and occupancy receipts are very, very important, and they can really bite you if you decide that you don't want to send them a thing and spend the postage on that. And our rule is always you send them by registered mail because you got a receipt, you got a copy of it, they get a copy of it, and all is well.
All right.
It's the best I can do on short notice.
Well, I'm sure we'll get an update soon because they're still in the property as of right now, right?
They're still in the property.
That's crazy.
Still going on.
2 years long. You know what the crazy part of this is? It's not even a 2-year journey. This is a 12-year journey now because they had a 10-year relationship that just went squirrely at the end here.
Oh,
it's crazy to think that
so.
can happen.
And to be fair, okay, I reached out to them during the time of the recess between the Court of Appeal first appearance and the Court of Appeal second appearance and said, look, let's sit down and talk about this. I talked to the landlord. The landlord said, let's offer them some cash and get them out of here. I So I said, okay, I'll sit down with them and do that.
Yeah.
So I contacted them. I said, look, I think it's really important that we sit down and talk. I think it's really to your benefit that we do this. Can we do that? And I'm talking to the wife, and the wife says, yeah, I think we can do that. I said, perfect. I said, I think I've got some information that's going to be very good for you. And, I think the sooner we sit down and do that, the better.
Yeah.
And then they ghosted me for the next, until we went back to court for the 17th, and got their butts handed on to them when they went in. And,
Oh my God.
we just saved a few $1,000s to the landlord, who was prepared to just write the check and get rid of them.
Yeah.
And now he's going to get rid of them for free plus the bailiff probably.
Yeah.
So
There
there you go. Yes.
Is this a case where the house burns down mysteriously and they kind of have to move?
We won't answer that one on a
What are you
recording.
trying to say?
All right, with that being said, we're going to move on. Thanks, Jim. All right, and that is Tales from the Trenches. That is, again, a segment that we like to do just to show you what could happen. So, I mean, at the end of the day, Jim brings some valuable points, right? Make sure you document everything. Make sure you use those use and occupancy receipts. Be on top of, if they're late for rent day one, get on that notice day two, right? So just be diligent. All right, we're going to move on to our highly anticipated talk for tonight, and that is with Miss Kelly Fry. Come up, Kelly. She's going to talk about the investor dream of owning multifamily properties. Now, she's going to go in depth today on the very first multifamily investment property that she purchased, and it kind of started to become the stepping stone, almost a domino effect of acquiring multifamily buildings here in the greater Vancouver, Fraser Valley area, that now you've got a portfolio of how many buildings?
5.
5 buildings at approximately how many doors?
Probably about 140.
140 doors. Excellent. I mean, that's what a lot of investors aspire to. And it starts with this one. And it was a long journey. She's going to go through all the numbers. She's going to go through the process, the joint venture agreements. I'm going to stop talking and let her take it away. So there you go. That's your number there.
Now,
And
after that exhausting presentation, does anybody need a bathroom break, water break,
An exorcism.
stand up and stretch?
I've decided to invest in stocks and bonds from now on.
Well, we'll just wait a second for Paige to come back. I know she took a bathroom break. But this was a bit of a passion project for me to prepare this presentation. I've never sort of sat down and analyzed the last 8 years of my journey on this deal. But it's quite emotional to go through it all and put it in a linear fashion, because when I was experiencing it all, I didn't really stop and look at the numbers or think it through. So looking back, it's quite interesting. So for most investors, the idea of having a multifamily property is kind of the pinnacle, the dream that we aspire to. We may start off with condos, townhouses, and what have you. But there's this idea that you're going to trade up, just like in the Monopoly game, when you trade up your properties for hotels kind of thing. So my journey began in 2002, and this is Frederick, my friend, who at the time is 87 years old, and we went skiing at Cyprus. And that's the kind of character that he was. Very, very fit, very intelligent, and I never viewed him as being elderly in any way. So in 2002, I had been taking real estate investment training through a company called Trigrant Learning, changed names multiple times. Some of you guys were in the same system, Cameron, Mike and Manuel, ultimately became Rich Dad Education. And we learned about vendor takebacks, and I called from the newspaper, the Maple Ridge News, and I asked this person if he would carry financing, and he said yes immediately, and that was Frederick. Now, here's a man from the British Properties in West Vancouver putting an ad for properties, no realtor involved, taking the call, and then comes to meet me to show me the property. And when I asked him for vendor financing, I was expecting a second mortgage to minimize the cash down, but he actually owned half the building, clear title, and he was quite happy to give me 80% mortgage. So this was a big awakening for me. And when he found out that I was a CPA, he immediately wanted me on the Strata Council as a treasurer. So that's how our relationship began. And, it's been a life-altering relationship for me. He became my mentor, and he changed the course of my life. And he has lived off of passive income from his apartment buildings for years, which is, of course, the dream that we read about in Rich Dad Poor Dad. that wealthy people live off the income from their assets and businesses. So he is just like Rich Dad in Kiyosaki's book. How many of you have read Rich Dad, Poor Dad? A large part of the room because of who we are, right? So here are some pictures of us at different times when we would get together. And I always have idolized him. And I hope that one day that I could be like him. So given that he owned these apartment buildings, it planted the seed for me that one day I wanted to own apartment buildings as well. Now, in terms of influences in our lives and our thinking, we are shaped by our parents, by our teachers, by our community, by our relatives. And to change our predetermined path, there are a few ways that I've learned over time that will potentially elevate your situation. One is hypnosis. If you go under hypnosis, you can change the trajectory of your path. Mentorship, like I had from him, changes your perspective. Or if you change a peer group, because who you surround yourself with matters. Now, some of you have been in real estate investment clubs. I was in the real estate investment network for 16 years, RAIN. And in that group, you wouldn't know that only 1% of Canadians own more than 3 properties, and only 4% of Canadians own more than 1 property. And so people in the regular world think we're crazy, but people in an environment like that, that's just the norm, right? And that's how I know Russell from all the years with the JV Jedi. And so in terms of the difference in thinking, my dad, who I'll call Poor Dad, you know, he did well for quite a few years, but he lost a lot of money in the stock market in the last few years. He felt that debt was bad. And yet when I met Rich Dad, he understood that debt was a tool to leverage wealth. And he was one of the first people in, I don't know if it was the early 70s, he started building in 1963, his first building, but he did the first condos that were built. And the profits that he made from selling some of his developments gave him enough of a nest egg that he bought 300 units in Hamilton, Ontario. He put down $500,000 on a $5 million purchase, and it had an assumable mortgage for 30 years. And so, you know, every time he would tell me something, I would say, okay, so he leveraged $4.5 million. And unfortunately, you can't save your way to wealth, but you can leverage debt to make yourself very wealthy. Now, my dad, he always said money doesn't grow on trees. But every time I was with Frederick, I had this feeling like money grew on trees, like he was such a possibilities thinker. And then if a property was beat up or that, my father just viewed it as a dump. But Rich Dad always looked at what could you do to elevate the value of a property. Now, I remember in that very first building, that condo in Maple Ridge in Hammond, for those of you who know Maple Ridge, where he had built the building and I bought my first unit with him. Someone went to rent a property and it was below market. I saw the ad in the hall and I called him and I was, so upset. This person's charging this low rent, like this is affecting, my rent kind of thing. And he said, well, you should just rent it out and re-rent it and make the profit. And I said, you're right. Okay, I'm going to do that. So I don't know, I made $400 maybe of cash flow. And I told my own dad, and he says, well, why? I wonder why. But he wasn't thinking of how to make profit. And so then that same condo, they decided to sell it. So I said to my dad, they want to sell this condo and it's below market. And he said, well, I wonder why. What's wrong with it? Whereas Rich Dad was like, well, you should buy it. So I said, okay, but I don't have the money. I was quite broke at that time. And he said, well, I do. So he said, I'll lend you the money. So that was my very first deal where he lent me the money and he let me make the entire profit, which was $40,000. He wanted to teach me how to do a quick turn. And so then along the way, as a realtor later on, we sold a lot of pre-sales. And 2 pre-sales that we had, clients had secured, they collapsed. So I picked them up because I realized at that time they were good deals. And so I told my dad, and he said, well, where are you going to get the money? And quite honestly, I wasn't totally sure, nor did I expect that the bank was going to make me put 35% down instead of 25. But I just moved forward. And then Rich Dad, when I told him, he said, good. Every time I told him I bought more property, good. He never worried about any of the details. So on this journey of figuring out how to buy the first apartment building, there were a lot of lessons along the way. One is be ready when opportunity knocks. Because when opportunity did knock, I wasn't in the income situation that I am today. And yet the rules of the government have changed today from 2016 when I got this opportunity. So thank goodness that I didn't worry about it. I just proceeded with this vision. Be connected to people who know what to do, because I didn't know what to do with the building, but I had been in rain for 10 years by then. And I knew people who knew what to do. This is my water, I think. Cameron and I were on a plane that was like so freezing. We both got a cold. Always take action, moving towards the goal, the direction of your goals. Even though you don't know what you're doing, you know you have a vision to head there. Now, unlike in school where we're taught not to make mistakes, I made many mistakes in this situation, but you're going to see that despite the mistakes, I still did quite well. And you have to adapt to the fact that you're going to have to be comfortable being uncomfortable, because being an entrepreneur and being an investor means it's not comfortable or everybody would do it, right? So in the spring of 2016, I was working with a client who was flipping a property with his brother-in-law. And I found, they were doing some flips on houses, and I found this fourplex in Chilliwack. It was real, you couldn't even breathe in there, like so bad, it had to be completely redone. But that was great for them. They bought an ozonator and, carried on, redid everything. And they stabilized the building with new renters at current market. So it was good cash flow property. And at that time, they hired a property manager. And the property manager came to one of them and said, I've got this off-market listing for this apartment building. Would you be interested? And so immediately they called me, and it was for a 16-unit apartment building. Now, this particular client is a seasoned investor to an extent. He had been trained in Rich Dad Education as well with the courses. And he knew our fundamental rule of investing, which is always write the offer right away, secure it, because when you write the offer, you have control. Nobody can come in and bump you out. Even if you don't know what you're doing, just lock it down. And let me tell you, we had no idea what we were doing. We had owned condos and houses, and we had experience, but we didn't know, we were out of our league on commercial. We had no idea how to finance it, and we didn't know where the money was going to come from. But I had a vision. I wanted to be like Rich Dad, and this was my chance, and I knew it. So we had an accepted offer for 1.3625, which is kind of shocking today when houses are that much, but this was an apartment building. And I think I actually wrote the offer, but I was inexperienced in doing multifamily. So I didn't realize that there was really no commission, and that the agent was expecting a commission. And ultimately that commission was going to come out of our pocket. So I never made that mistake again. So that was a $22,000 or $24,000 mistake. We didn't know any of the steps or the closing costs. As I said, we were in rain. And so I knew a realtor in Alberta because I went to the conferences, and I knew he had done some syndications of apartment buildings. So I called him. And then he connected me with a top commercial mortgage broker who of all places was based in Manitoba. But these guys are, in the top in the country for commercial mortgages. Now, when I called that commercial mortgage broker, he was very, very abrupt. He was very busy, very aloof, and he told me I was going to have to get 3 reports. So I was a bit despondent, but my partner just kept moving forward. So commercial appraisal, number 1, commercial inspection, number 2, and phase 1 environmental. And these all cost somewhere about $3,500 to $5,000 each. So, and that's before you even know if you can get a mortgage. So welcome to the big leagues. This isn't like residential. We were going to risk $15,000 just to find out if we could actually get a mortgage. And so we moved forward, and we decided to take that risk. Now, a glimmer of hope hit me when I found out that we could actually get a private mortgage for up to 85% loan to value. Like, this was shocking to me. Because most people, investors included, we think that you're going to need 30 to 35% down to get a commercial mortgage. Then I was shocked to find out that we would be able to get some of our renovations financed. I had no idea. I said, man, the rich, they have different rules. You don't even need money to buy real estate and renovate. So that gave us some more hope. Now, in terms of figuring out how much money we were going to need, we figured we needed about $500,000, which at the time seemed quite daunting. However, my partner, who I'm going to call G, told me his aunt had $250,000 to invest. She had sold a business that she had built, and she was interested. He had talked to her. So that meant that he and I had to come up with $125,000 each. So that seemed manageable. He had a business as well. And then he wanted to bring in his brother-in-law, who'd be the sweat equity partner, M. So he had a bit of experience, but really not a contractor. I was an accountant and a realtor. So this was a good fit here. So how did I come up with the $125,000? Well, I started my first business in 1995 as a sole proprietor in the clothing industry. And then I incorporated. And then once I was incorporated, I sought out a line of credit for that business, which was $60,000. Now, in that business, which I ultimately shut down, I realized one day that I could shut the business down because if I kept the line of credit alive, the bank wouldn't know it, and I could change the name of the company, which I changed it from Maternal Instinct Wear to High Performance Investments. And then as I did real estate throughout that time afterwards, I paid off that line of credit. So I took that $60,000, and then I pulled $65,000 from my real estate corporation from my retained earnings as a realtor. So that was my $125,000. So visually, I did, lent the money from one company to my holdco, and then I pulled probably a dividend from the other company. So in reality, I only used $65,000 of my actual earned income. So this is how it is laid out. Auntie L, she put in $250,000. G put in $125,000, I put in $125,000, and M put in $0. Now, when you're putting together a syndication for multifamily, there's always a profit split that's prearranged. And whether it's a limited partnership or a corporation like we set up, it's usually somewhere between 25-75, 30-70, 40-60. And once you become experienced, it comes down to the actual profit in the deal and what is negotiated and how much experience you have. So we figured, well, 30% should go to the working partners who are going to do all the work, and 70% will go to the money partner. So we said, okay, the three of us are going to get 10% each, and then the money partners are going to get 70%. So since Auntie was putting in half of the money, she would get 35, and we would get 17.5 each. So we had the equity, sweat equity side, and we had the money side, giving us 27.5% each on this deal for G and I. So when you look at the structure, this is what it looked like. And we all had holding companies. So our holding companies all held our interest in the joint venture corporation that we set up with our universal shareholder agreement. And by the way, a lot of these concepts we learned through our real estate investment networks that we belong to, and lawyers as well. So the way the numbers looked, for 85% of our purchase price, our mortgage would be about $1.12 million. Our down payment was 15%. And unbeknownst to us, our closing costs fell around the $100,000 range, which we didn't quite expect, but we now know that's what it looks like. So we had coverage for about $232,000 of our renos. We had the remaining renos covered by $150,000 advance that we got from the lender who lent us the mortgage. So that left us short on the hard. It's actually higher than this. I thought I corrected this number, but yeah. I fixed these numbers before I came, so. Yeah, 219,000. So in investor circles, it's quite common to have hard money loans. So we found some people that lent us money, I believe was for about 10% interest. I don't think we had any payments for a year, because knowing that we would refinance the building for the higher value and pay them back. So again, these things kind of just happened haphazardly as we were going along with our plans. So for interest's sake, I thought I would show you the breakdown of some of the charges. Travel fee for the lender to view the property, $1,000. That was a new one. We didn't know they were going to fly in and charge us that. Then about $14,000 for the lender because they weren't, making enough with their interest of 10% or whatever it was. Lender fee for the advance that they were going to give us on the construction, $500. Mortgage brokers, they don't work for free, so that was $13,000 for that. We also found out we had to pay the legal fees for the lender, which is not uncommon with private deals, $9,400. We had to incorporate the joint venture corporation for another $1,100. And we had to get title insurance for $1,100. Then our lawyer charges $7,600. We had to do up a joint venture agreement and a declaration of trust. So when you're selling a property, the new buyer will have to pay property transfer tax, which is very expensive in BC. So one planning technique you can do is set up a trust so that when you sell the beneficial interest of the property in the future to the next buyer, they can avoid paying that property transfer tax, which we had to pay of $25,000. And then, of course, there's the realtor that had to be paid that I forgot about in the contract of another $25,000. So that ran us over $100,000 right there. Now, before we go any further, here's what the property looked like. It's quite dated in the 60s. Turquoise tubs and bath in the bathroom and sinks, old kitchens and everything. And then this is what it looks like today. We redid everything, the exterior, the balconies, the roof, the paneling, all the kitchens and bathrooms, quartz countertops. And this particular unit here is an Airbnb that I ran for about 5 years until the government shut me down this year. So it's now furnished rental for someone. And it's going well. So a year later, we're now in 2017. We were able to refinance this property and it appraised for around $2.75 million. And of course, we had to pay the mortgage brokers again, $45,000. Lawyers and mortgage brokers, they get a cut every time. And when you factor in all of our costs, our equity lift was somewhere around $500,000, $518,000. And I'm recreating these numbers going through old emails to do this presentation, but this sounds about right. So we ended up getting cash back on this refinance, which is also mind-blowing. And so Auntie got 170, G and I got 85. So we actually were left with only 40,000 each in, and she still has 80,000 in the deal. Remarkable, really, and considering I use that line of credit, really have none of my own money in the deal still to this day, until you'll see what happens next. So when you look at the return on that equity lift, it's about 73% for G's aunt, 114 for us, of course, an infinite return for the contractor. But then when you factor in the fact that we got a bunch of cash back, the return is quite staggering of a return on cash. And that's in a short period of time.
Amazon did some pretty fast work.
Yeah, he was pretty well living there. And it was also at a time when we were allowed to do renovictions. And we hired the property manager to handle all of that. But they were bad news tenants in that building, and the building was not good. Now in spring of 2018, because G likes to work fast, he finds another apartment building in Maple Ridge. This one was actually on MLS, 21 units. And on this particular case, I acted as the agent for this as well, but this time being on MLS, the commission was there, so that was good. And there was already an accepted offer. So we just went in with a backup, not expecting much, but that offer actually collapsed. And next thing you know, we were in the driver's seat with our accepted offer. I think we probably had a better commercial mortgage broker than whoever had the accepted offer. Because if you have the right team, it shouldn't be a problem getting the financing. If you have the right realtors, you should win, right? So lucky for us. Now, we still were not that seasoned in our calculations, but we figured we needed about $825,000. So with quick math, we thought, okay, that's 5 limited partners at $165,000 each, because we decided to structure the general partnership with the limited partner to limit the risk of the limited partners and their money. This deal was extremely stressful right to the actual closing date. I didn't even know it was going to close the day it closed, but that's a story for another presentation. This is it's only here because I'm linking it into the Chilliwack building. So we had some success, but we fell short on raising capital for this deal. We weren't very well known at that time. We were new, but we didn't want to lose the deal. So we brainstormed, and as I say, we followed, some of our contacts, lawyers, to set up the proper general partnership. And that's very costly too, might I add. 20 grand for that. So we managed to get 2 partners who put in 165,000. And you'll remember we just got $85,000 back on our refinance. So we said, okay, we're going to take that money and we'll go in as LPs as well. So now we had 495,000. Well, we were short 330,000 and we were running out of time. When we realized, wait a minute, maybe we can pull some equity from Chilliwack. So we tried to pull 335,000 or 325,000 from Chilliwack. By the time the mortgage broker's fees and the legal fees, and by the way, they also took their interest in a year in advance for all the payments, which was good because we couldn't support the payments. Like, I don't know what we were thinking. We get this mortgage. But it was enough to get the deal closed. And what we figured was, okay, we will, the partners in Chilliwack, we will all get our proportionate interest percentage-wise in the Maple Ridge building, because it's really our equity that helped us to get in. And that is, it should be, we should have that ownership. So we ended up, struggling along, and we ultimately had to renew this mortgage again because we didn't know what else to do. And now we're up to $428,074 that we owe with no way to cash flow it. And I'm thinking, we're going to have to sell this building. This is my dream. How am I going to live with myself? I wanted to keep this apartment building. And then one day, it dawned on us, wait a minute, maybe we can refinance with CMHC because they'll give us a higher loan to value. They'll give us a longer amortization. Maybe it'll be enough for us to pay that second mortgage back. And ironically, Cameron, that gal that's working for us now, based out of Ontario, she was one of the lenders that put money into this deal. So panic had set in. We didn't know if we could hang on to the building, but I didn't want to let go of my dream. And as I say, we figured out that this may be an option. And the second mortgage holders were on our tail, man. They were like coming at us because they wanted to be repaid. The CMHC process was very lengthy. It took 9 months. So we were, definitely over our deadline by the time we did actually get it. And as a backup plan, we had to put the property on MLS for sale because if CMHC declined us, we were toast. So we listed at 2.99. We got 7 offers. And every time an offer came in, I want to throw up. I was like, I can't take an offer. I don't want to sell this building. And the highest one was about 2.7. But we hung on. And by the way, a very successful real estate investor I know once told me that it takes a different level of thinking to solve a higher level problem in real estate. And that's what happened to us. We just had a different level of thinking to think of that CMHC option. And so we were saved. We got an approval, saved us from the unthinkable, and a miracle happened. We got full coverage of all the debt payouts. We got a 2.89% interest rate and a 40-year amortization. And without thinking, we agreed to a 10-year term, which made our partner, Elle, really mad. But today, thank God we did that, because we would be toast today if we didn't have that. So the bank mortgage at that time with the National Bank by then, because we had gone from the private mortgage to National Bank's mortgage, plus that outstanding second. And then CMHC hit us with a $108,000 fee, which we didn't know about. We thought we were getting some cash back, but that was not the case. No, they didn't. They took it out of the proceeds. Yeah, it was very nice. And then CMHC subscription fee, of course, legal as always. It was basically a wash. We now had a new mortgage of $2.2 million. However, this is supposed to be $31,000, not $25,000. We couldn't pay the mortgage brokers, so we don't know what to do. So G negotiated with them and came up with this payment plan of $7,000, $6,000, $6,000. But notice something, it was 2020 when this happened. And we had no real means of repaying that either, but we were basically kicking the can down the road because the property wasn't really cash flowing. It was quite tight. However, you're going to see what happened next. Canadian government announced CEBA loans for businesses for $60,000. One of my friends called me up from Alberta, and he is a former very successful banker, and he said, "Hey, have you gotten all your CEBA loans?" I said, "No." And he said, "Why not? I've got 10 of them or 8 of them." I said, "I don't have this payroll of 30,000 or whatever." He said, No. They came up with a second option. If you can show 40,000 of fixed expenses, it's a slam dunk. And he said, with real estate, it's so easy because you just show your mortgage payments, your taxes, your insurance, and boom, every apartment building was a slam dunk to get the CEBA loan. So next thing you know, $60,000 injection, we were able to make our payments to pay the mortgage broker. Spring 2020, partner M runs into financial trouble. He wants to be bought out. I don't know how we negotiated such a low buyout, but he agreed to take 20,000 because we said, well, our legal bill is going to be 5,000, so we'll give you 20, but we don't have any cash flow because the CEBA loan hadn't come in yet. We have a little bit of cash flow. This is all we can do, $1,666 a month for 12 months. And so what happened was that freed up 10% ownership. The three of us just split it 3 ways, 3.33 each, because the cash flow came out of the building, right? So now there's 3 of us. We're up to 30.8 and L's up to 38.3. Spring 2022 comes along. G proposes a buyout to me. He's in financial problem. He needs cash, and I remain staunch in my resolve to keep the building. He wanted $300,000 for his 30.83%, which included the $40K that he still had in the building, right? By this time, I felt the building was worth at least $3.4 million. The buyout price seemed relatively reasonable to me, and this acquisition could bring my ownership up to close to 62%. Now I had to find the money. Well, I'd done a refinance on some property that had freed up $150,000 that was coming, I knew. So I told him I had 150, but that I was going to need time to get the other 150. And at the same time, I swear to God, the universe provides. A realtor with a large inheritance came up to me who's older, didn't want to sell anymore, and she said, "I'd like to invest money with you. Would you be interested?" I said, "How much?" She said, $150,000. I said, "I can make that work."
I usually start at 200, but we'll make it work.
She said, "Yeah, I'm looking for about 8%. I said, "That sounds good." I said, "What's your goal exactly?" "Well, I figure I have to live, I expect to live another 25 years or so. I don't care if my money runs out because, I don't have any kids. I don't like my stepkids." So I said, "Well, how about this? What if we structure it like a mortgage and I pay you blended payments every month?" Because I didn't want this big looming balloon payment over my head. She said, "Yeah, that sounds great." So that's how I came up with the cash. Now, this is a building in Nelson, BC. It's 61 units. And I want you to look at this very closely. In 1980, Rich Dad bought it for $180,000. And in 2023, I sold it for he and his wife for $6.925 million. No job will ever get you to that place, and no savings will ever get you to that place. And so this is the kind of thing that I've learned from him over the years. So with this building, I figure it's worth about 3.68 right now. Current mortgage is about 2.104 because there's been some pay down. With my ownership of the equity, it's about 977,000, and I've invested about 340,000. My ROI is about 287%, but that's not completely accurate because I only put the 300 in the last 2 years, right? After years of minimal cash flow, the cash flow is around $5,000 a month now. And we have no vacancy. And when we took over the building, the rent roll was $11,325. And today it's over $20,000 a month. So the lessons I've learned, now this is a photograph that I took on June 6th with Fred. He's been in the hospital. He had a stroke 2 years ago, and his health has been on a drastic decline. He's in a locked ward, which, is not something he likes, even in his state of dementia now. His wife doesn't want me to visit him anymore because it's too upsetting to see him. But when she's there, because she goes every day, she tells him I'm on the phone and he says hi, even though his speech is, quite impaired. And the other day he said to me, hold on to real estate for as long as you can, any property. So his lesson's still there. And I just wanted to share it with everybody. So you see, I couldn't have predicted this path of what happened, but when you have a strong enough vision and why, I think great things can happen.
Awesome. All right. It's about time she broke the silence. Talked about that building. I mean, it's pretty incredible. I mean, watching what she still does, yeah. And it's been pretty incredible watching her because it was that one, and then it was Maple Ridge, and then Abbotsford, Cloverdale, Mission, like just kept checking them off. Okay, which city am I going to invest in next? And Maple Ridge did make the news. Yeah. And
article in the newspaper wasn't the first page.
My name, they used his, so it's great.
I mean, there's probably other stories now because things have changed, the renovation stuff and everything else. Like each building would have a lesson and a story from there. But it was pretty, we thought it was a good opportunity because as things have been changing in the BC market, we got to start looking and changing up our strategy. And multifamily is definitely an opportunity that you can still do with the right, purchase, the right strategy, and there's long-term potential there. That's what we're looking at. A lot of people get in and they're doing really short-term deals, especially when you buy a condo and then 2 years later you're selling it. These are big, long plays, and it took you've had that since 16. So it's taken now, but now it's pumping out 5,000 G's a month, and she owns 66% of it so far. So doing very, very well. So if anyone has posted anything, we'll take a look at that in a little bit here. But we're going to dive into our hot deal. And sticking with the theme of multifamily, we found one for you guys to take a look at. So this here is out in Hope, British Columbia. It's currently on the market for $2.7 million right now. It's a 3-story building, 17 units, so very similar to what Kelly had in Chilliwack. It's currently got 8 one-bedrooms and 9 two-bedrooms, steps away from the downtown core, 5 minutes to Highway 1. The total land size, about 15,196 square feet. This is what the revenue looks like right now. So the total income is at about 171,000. The rent's at about just over 170. So you got a little bit of coin operated laundry as well in there. After you factor expenses, the net income is around 106,000. It's asking right now about a 3.95% cap rate on it. However, what I will tell you is there's some opportunity to increase the rents right away on this building because there's 3 units that are going to be vacant. One's vacant right now, and 2 more are going to be vacating very soon. The building has been traditionally an elderly building. The owners have kept it more for an older population, but of course, new owners can do whatever they want with that. And when you look at some of the photos that Kelly has now, first of all, the building is in great shape. For the moment, when I went and saw it, it's in great shape, but you do have the old, there's a couple of purple tubs, a couple of purple sinks, so she had the mint greens or whatever. These ones got the purple ones. So they definitely could use it. However, when I did tour a couple of the units, they're like right out of like a time capsule. Like it looks like those cabinets in the kitchen were just installed, but that was done in like the late 60s. So they've been impeccably maintained. Some new flooring throughout. They've updated boilers, they've updated roofs, windows, things like that. So this is kind of, the area that it's in. Of course, gorgeous mountain views. Can't complain with that. So that is an opportunity. If anyone's interested, let us know. We can get you the brochure with the financials and the rent rolls and everything like that. And you can take a look at that in Hope, British Columbia. With that being said, again, we got some QR codes because it is 2024. Flip your phones out. All of our social media is here. If you're not already following us, please give us a follow on our social media. I do ask if you guys are interested, give me a follow on YouTube. This is where you can check out all of our past live events. And again, if you're following on YouTube, make sure you hit that subscribe button right now. Follow it there so you guys can go back. If you're interested in rewatching Kelly's talk, or you want to share some of the stuff that came up in Jim's talk, or kind of some of the information from the rate hold, you can go back, rewatch that, share that with your friends, and you can do that by subscribing to my channel there. And again, we do have our private Facebook group as well, so you can join us in the private Facebook group. This is an opportunity for you to come, create a bit of a community. We've got over almost 260 members, so it's been growing steadily every single month. You can post deals in there, you can ask questions, and of course, stay up to date with what's going on with our regular monthly meetings. And of course, our next meeting is going to be on August 22nd. So mark that in your calendars. We will see you guys then. That wraps it up for us tonight. Thank you so much for coming out, and we'll see you guys on the 22nd. And for those who are watching on YouTube, thank you so much for sticking through it the whole way through. Again, hit that subscribe button, comment on this video, and of course, like it. It does help all the algorithm stuff. And we hope to see you live, if you can, in one of our live events as well. So thank you so much, and we're going to end it there.